following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote from an unknown author. The start to a better life or a better world or a better future is simply the belief that it is possible. Market-wise, let's take a look at it out here. We had the Dow Industrials up 78, NASDAQ up 27, S&P's up 6.5, gold contract up $12.50, trading at $1,329 an ounce. Silver up 17 cents at $21.19 an ounce. Platinum up $7 at $1,505 an ounce. Copper flat at $3.25 a pound. Light sweet crude down $1.23 at 102.17. Bonds. You had the 10-year up 6 ticks at 124.30. 30-year up 7 ticks at 136.06. King dollar down 166 ticks, trading out at 80.05. You have the euro up 30 at 136.42, and the yen flat at 101.61. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Cash S&P, this is what we did. We up $7.50. We did 569 million shares versus 627 on the NYSE. Bottom line is that what you can see out here, once again, you get a bounce on lighter volume. We turn around, we take a look at the Dow Industrials. What we have with the Dow Industrials is this. Dow goes up 78 bucks. We are at 16,985, and what 16,985 has done is that it got it out of the lower range once again. We take a look at the NASDAQ composite. The composite out here, $1.7 billion versus $2.2 billion. We're up $27. We're at 44.04. If we take a look at the correlations inside the ETF structures, this is what you have. The SPY. We went up on 68 million shares, down yesterday on 108. The free Qs, the NDX 100. What you have there is that we went up on 27 million. Yesterday we came down on 40 million. The IWM, the small caps. What do you have inside the small caps? We have, it's interesting. The small caps are really dead meat. Small caps couldn't even bounce. Well, up 15 cents. You did 27 million versus downtown at 52 million. Gold contract. What do we have with gold? Gold's on the move, folks. What you have is this. Gold contract today does 154,000 contracts. This is a beauty, folks. You have an expansion of volume. We're up $12. $12 not a huge amount of money, but what you have is this. Your swing point on gold from the July 1st area is 1334. We did volume of 121 million shares. Bottom line, we did 123,000 contracts, rather. Today we did 154,000 contracts. Silver. We take a look at silver. What do we have with silver? This is what you have. Silver has proven that it's stronger. What we have with silver is this. Silver today, we did 34,000 contracts. You have it up 17 cents. and she is also running into her swing point. Her swing point is 2133, and it's 42,000. This is building cause to basically get up and over the swings of the last 3 weeks. We've had a consolidation the last 3 weeks. We'll see whether they can make it to the February highs for silver, March highs for gold. Inside the XAU, HUI, we had the gold and silver equities. They were running today with volume, by the way. The XAU up 262. We're at 103. We take the B point out. I won't get the volume on the XAU, the HUI, until a little bit later. Bottom line, XAU is on its way to 107.31, which is the high of March 13th. What's going to get wild here, folks, is this, is that the way that the gold and silver market is set up, and what happens, by the way, is this. The XAU and the HUI, because they bunch together the volume characteristic, that's why it's later in the day. If, in fact, we get volume over the B point, what you're going to see is this. We're actually going to get above the highs that were generated in March, because the price projection is over those highs. Now, that's unusual that you can basically do 100% move for move and get over those levels, but that's mathematically how it's set up. HUI up $6.58. You're at 245. It blows away all the swing points. HUI is on the way up to 261. Bonds, the ever-ready bond market. What do we have out here? So, the 10-year, we do 1 million contracts. Expansion of volume once again. We are at 124.30. Your swing point up there is 126 rather. So we're going to make a run for that swing point. We'll see whether we get the juice in order to get up above it. My take is that, yes, that's exactly what we're going to have. The 30-year bond. What do you have with the 30-year bond? This is what you have. 30-year, 322,000 contracts. We are at 136.26. And this baby here, just so you know, folks, okay, the 30-year is right under the lows of the high. And that number is 137.08. So you can see there's 32 ticks and 1 point in the bond. We're at 26. So you get 6 ticks there, plus you get another 8. You're only 14 ticks away from the bottom. Once it gets into the bottom, what you're going to see, if you come into that bottom with force, watch out. Because I suspect folks that have, have been shot the bond market, there's plenty of them, guess what? Their stop's going to be on the other side of 138.10. And once it gets inside that bar, what you're going to see is that you're going to see traders pile on and say, okay, what do we have on the other side of that? Can we force the issue here? King dollar. What do we have with King dollar? This is what you have. She's down 161 ticks today. We're at 80.60. And what you have with King dollar is that she's backing down with lighter volume. This is going to be a war between King dollar and the gold market. If we go back to the bond market for a second, what you do have is the 10-year. The 10-year is back under 2.6. We're at 2.555. Pretty impressive. Some of the high-volume stocks we have out, well, here, let's go to the IBB. IBB is what took the NASDAQ south yesterday. IBB today did 1.3 million shares. She's up 254. She got to a lower low, rejected that lower price. What you are going to have, though, is this. You're going to have a high-volume low on a weekly basis inside that IBB. I expect we're going to get follow-through. Why? Because what you have a high-volume low at 226 to 207. Our phone number is 877-927-6648. The Fed minutes come out today, and inside the Fed minutes, what it's all about is this. It's pretty wild. The Fed minutes themselves had some Federal Reserve policymakers were concerned investors may be growing too complacent about economic outlook, and the central bank should be on the lookout for excessive risk-taking. Minutes of their June meeting said today. Bottom line is that, yes, the whole world knows that the Fed basically is going to continue to feed the marketplace. The Fed is saying themselves that, hey, listen, we're worried about it. Is it going to make a difference? No, I don't see the rates going up. I don't see the rates going up, folks, not just because of the Fed, because the tapering inside the minutes, they said flat out, they look for that tapering here. I'll bring this up so you can They're looking at let's see. Officials also agreed that their bond purchase program would end with the final reduction of $15 billion in buying at their October meeting. October, folks, is right across, it's right around the corner, where it's July 9th, okay? So bottom line, they're going to basically bring that down. Is it going to make a difference? I don't expect it's going to make a difference. Why? Because what you have, the demand inside for bonds is huge, but what's also happening, the supply is decreasing on a continual basis. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. And the Dow Industrials finished up 78, NASDAQ up 27, S&P's up 6.5. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 78, NASDAQ up 27, S&P's up 6.5. And as we do each and every Wednesday at 20 past the first hour, we have our man, Mr. Daryl Martin. Daryl is an outstanding show each and every trading day right here at TFNN, folks, 1 to 2 Eastern Standard Time, the Diagnostic Trading Hour. He also specializes in the Nadex platform. He has the show 1 to 2 every day. Daryl and I also have another show, Trading Out There, Friday mornings, 10 to 11 Eastern Standard Time. Now, if you haven't test drove the Nadex platform, the way you do it, come over to our website at TFNN. You're going to see the banner on the top or on the side. Hit the banner. Bring up the account. It takes all of 3 minutes. They will put $25,000 of paper money into your account. You can listen to Daryl each and every day as he walks you through the great platform that Nadex has and the risk versus the reward ratios. Once you do get that platform up, what you can do is come over to our website at TFNN, and what you're going to see is you're going to see Daryl's analyzer. It's a great analyzer. He uses it each and every day. And in fact, that analyzer, folks, you can use even if you're just trading equities or futures in particular, because what you're getting out of that is what expected moves can be, will be, and you don't want to be putting trades on when an expected move is just finished, even though what ends up happening when moves are fast, either up or down, folks, it looks like they'll continue to go. But guess what? Mathematically, when things are stretched, things are stretched. Daryl Martin, what's going on?
What's going on, man? We called it again today perfectly.
Let's walk through it.
All right, we got oil right here.
Yeah.
And last night, 8:15, called up, basically said that we'd be looking at 102.29 as being our one deviation low on the day. And went a little bit lower, but we're finished up right around 230, right at around 102.29. So if you go look at the close of the 230 bar, we closed at 102.24.
And what happens, folks, on the Nadex platform, oil, the euro, some of these currency pairs, when you look at the risk versus the reward, if you are a future trader out there, it's pretty amazing, okay? Because, you know, if you trade in the oil contract, you know you're putting up $3,100, and, of course, today's a $1,200 move. Bottom line.
It's a massive move.
Yeah, huge.
And today, what we did on the show is I walked through and I showed how I use the deviation levels, as they can not only be a way to trail your stops,
right,
a way to know when to not add in, like you shouldn't be adding into shorts down here at 102.29.
It's huge.
But you wouldn't know that. I mean, the thing's been moving. Why not add in?
Sure.
You know? So knowing what the expected movement is, and it's not, you know, some pivot level, some support resistance thing based on past movement. It's not a standard deviation, which is based on past movement.
Yes.
I'm taking the implied volatility out of the oil options, off the CME, pulling their implied volatility out of the options price, which is the expected move. Implied is fancy word for expected volatility.
In real time,
word for
right?
Movement. Exactly.
In real time.
And it's basically an option trader saying how much they're willing to pay for a call or a put.
Yes.
Based on how far they think it's going to move. So what it really is people putting their money where their mouth is. So we take all of those votes built into the price on how far it's going to move, pull all of them out, and that's how we nail this day after day after day. And so what I showed people was, you know, simply throw up a 10-minute chart, and I walked through the trade step by step on how you could have caught the entire move down this morning.
Yeah.
And exactly when to get out. And I even showed how to hedge it if you're a futures trader.
Okay. How
to hedge it with Nadex. And then if we go over to euro dollar, same thing today. Flying on up, I showed how to get into it, how to trail that stop, how to ride it back down. And if you look at where we moved up to, one deviation move right there, moved it to the point, a little past the 0.7 level, but I always teach people high to low.
Right.
Why? Because it's an expected move, which means it may go down, like I say the expected move is 50 pips. It may go down 10 and then up 50 from the low, right?
Yes.
So it doesn't always go just up 50.
Okay.
And that's why on the expected move levels here, I actually give you not only the levels from settlement of the previous day, but I also tell you what a one deviation move is.
And, folks, what happens, which is so cool, is that the deviations in general, what Daryl's talking about, those expected moves, once they start moving, if you're ever, you know, heard, well, it's Tom Sosnoff or AJ or JJ from Thinkorswim, inside the option market, which is amazing, actually, is that it's very accurate in the aspect of buyers and sellers and what expected moves are going to be. Now, until it starts moving, it's not telling you which way it's going to go. But once it normally starts going, it's like, hey, that's where it's going to go. You know,
exactly.
And it's amazing that, so that's like a group intelligence that is coming inside the option market, buying and selling, and it's like, how does that work, right? You know what I mean?
I know. It's great. I mean, basically, it's everybody getting together and agreeing.
Yes.
Is what it really is. I mean, that's all that moves it, right? It's order flow and everybody coming together and agreeing on it.
Right.
And they just don't know they're all agreeing.
Yeah.
But we do. That's why that's what, my show's called the Diagnostic Trading Hour.
Right.
The whole point of that is diagnostic trading is being one step ahead of fundamental, seasonal, statistical, which is deviations, and technical traders going, how do they think? Where will they place their orders? How can I be one step ahead? So when the market does move up a deviation, I'm taking profit. I'm looking to go the other way.
Right.
I'm not the guy adding in at the top.
Right.
Which is how so many of us have been caught up in doing that.
And go ahead, I'm sorry.
And so, like on Eurodollar, I taught a very simple method. When the 10-minute bar closes above the deviation level, buy when the high is broken.
Yep.
Okay? Trail it if it closes above another deviation level.
Right.
Trail it if it touches another deviation level. Just keep trailing it up. Eventually it gets hit. Then it closes below this deviation. You get to ride it back down.
So if you're in your car right now, folks,
easy.
We're looking at this euro, and it's amazing because the euro today, hit the deviation level. Excuse me, folks. Hit the deviation level. Thank you. And hit the deviation level at 10 minutes of 11 Eastern Standard Time. And then what it does, which is amazing, it goes all the way back down into the Fed minutes, gets to the bottom of the breakout, and then explodes topside again.
Right back up to the same
deviation level. I know. It's
yeah. And we don't do this. Isn't like an occasional thing. I mean, you see me do this for like a year and a half now, right?
Right.
I mean, it's every single day.
Right.
And it's cool. It's basically it's getting market consensus of how far it's going to move. You just need some sort of simple method to help you on determining direction.
Yes.
And if you're wrong, just get out. Right? Don't try to fight it.
That's right.
But you know where it's going to go. And this, you build this into other concepts that we talk about. You talk about it, and Steve talks about it. Me and you talk about it a whole lot on magnet pricing.
Sure.
And so you target those magnets, and then you get those magnets lining up with deviations, and then that's just your money trades. We've done some of those together live on the air.
Yep.
And I'll do a lot of trades. This week I've done a couple trades live on the air, on my show. And we'll do them on Friday mornings as well in the Bull Bear Binary Hour. But, yeah, I mean, it pops up here. I hit a deviation level. I got a volume spike. See that big volume bar right there happening right there at 10:30?
Yes.
Obviously, I mean, there's a lot of things happening right then, but that big volume spike happens. All right, I'm looking to fade as soon as I break a low. Get a little momentum in my favor, okay?
Right.
So we're at a deviation level, volume spike. Volume dies down and keeps pushing up.
It does, I know.
We all know what that means, okay? So expansion on price without volume commitment. And then all of a sudden it breaks down. There's your cue. Get ready to go. And then just drops right back. Where does it go to? Right back to the deviation.
And, folks, inside the Nadex platform, when you're talking about a move like this, that's an extraordinary move.
That's a massively profitable move. Yes.
In both ways, no doubt. Listen, folks, come over to our website at TFNN. Hit that Nadex banner. Don't forget, every trading day, 1 to 2 Eastern Standard Time. You can listen to Daryl, 10 to 11 in the morning, Daryl and myself. Daryl, you have a great night, safe night. Look forward to the show tomorrow.
All right, see you then.
Stay right there, folks. Come right back. We had the Dow up 78, NASDAQ up 27, S&P's up 6.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's get over and take a look at a few of those gold stocks. We had them moving today. You had a nice expansion of volume. An Eagle, up $1.45, and this thing's been a little rocket ship. Now, check it out, though. This is going to give us an indication of what you have going on with the XLF and the XAU and the HUI, because this is a monster ABC structure on the way up. So check it out. Your A point on this, folks, is 29.32. Your B is 38. So you got a $10 A to B. Pretty intense. Your C is 36. That's 46.57. She broke the B point today, broke it with 2.9 million versus 1.3. Even if I take the largest it would be 2.7. Bottom line broke it. 10. That's $46. Let's go see what's at $46. At 46. Well, this is intense. So watch this. The gold market in general, folks, likes to do extended ABCs on the way up and on the way down. And I expect, it looks to me that what we may have here is an extended one. It hasn't even done an A to B equals C to D yet. But the way these are moving, so what that would mean is that if the first move is 10 points, the second move can be 13.8 or 15. You don't want to see an 18-point move, a 1.618, a 16-point move, because that's the end of a market. But I suspect that's what we have going on here. And, of course, this is an equity that got killed. There's no doubt. You know, the equity, I think, went from, not 79, I think it went from 89. Yeah, it did. So, yeah, 88.20. It was 88.20 in 2010. Goes all the way down to $24. Bottom line is that it is moving with velocity out here today. We go back to Great Panther, same deal. Great Panther, you know, got up and over the swing point. The swing point that was gunning for. You got to love this too. Swing point it was gunning for was 138. Volume was 2.7 million. Guess what? We got 2.7 million. This is the second day in a row we got 2.7 million. Now what that sets up for Great Panther is $1.60, and it's a big move because the way these are set up right now, Great Panther's been in a consolidation since March of 2013. On a weekly basis, you take out this 138. Actually, it's heavier than that. Yeah, 160 would be the first level, but guess what? What's game here is 248. Man, these are some big moves out here. Let's go to Rangol Resources. Rangol, 685,000 shares, takes out 85.48. That was with 540. These are classics there. Let's see if Gold Corp moved at all. Gold Corp moved. It's going to need more movement. Gold Corp was only at 48 cents at 28.32. She's going to need more volume. 4.9 versus 6.9. Needs more volume. Inside the silver market, Pan American Silver. This is an equity that has been building cause and absolutely refuses to back off the 1563 area. She closes at 1562 today, does 1.4 million. Now she needs huge volume, but the way that she is trading, she is going to bust over this thing, and I expect what you're going to see is that volume is going to come in. And you get that volume coming in Pan American Silver. This is a real personality stock. This thing will move. You know, they couldn't bust it down. This has been an equity that's down off $42, gets into a low price point 8 months ago at $10, and now she's at 15. So there's a lot of movement out here. We go into and we take a look at First Majestic. That is AG. That was up 29 cents out here today. She is going to need more volume also. She had an expansion of volume out here today. She's at 1084. We did volume of 1.2 million. She's going to need 1.7. The great thing is that she didn't get into her swing point. And it's always great when you don't have the volume, you don't get into the swing point, you come up into it, and you're closing right below it. In this particular case, that's exactly what we did. She's at 1084. The swing point's 1097. I suspect she's going to go after it tomorrow morning. And as I said a little bit earlier, what you have here is that you have the aspect of the swing points in the silver equities are in February, the higher swing points. The swing points in gold are in March. In both cases, these ABC structures have a price projection over those swings. Now, the way that you're going to want to trade this goes like this. If, in fact, we have ABC structures, which it looks to me like we're going to have, because you got to remember something, that the XAU and the HUI is just a culmination of all these stocks that I've been bringing up. And most of them have volume as they took off the swing point. So what you want to stay on top of is this, is that the swing points from February and March, that's 100% move or move. So in that context alone, what ends up happening as you go up, the aspect is that you go up and 100% movable move, you like to back off. Now, in this particular case, if you have a confirmed ABC structure on the way up, I suspect it's going to take it out. You'll get the price projection, and then that move in itself it will be a very tired move at the end. You're going to want to be pushing some stock out, because what you'll have happen is this: you'll have an aspect that there'll be euphoria in the market. All of that will be happening simultaneously. There'll be well, we'll see whether you'll hear gold everywhere. As soon as you have that, guess what? This is the third time that we'll have an expansion of like 30% in the last year, since last June. That's going to take your money away for the retracement once again. Lumber liquidators. Lumber liquidator was down $6 today, trading at $70. Monster volume today, by the way, on 5.6 million on the way down. And guess what? Someone knew something, because right now Lumber Liquidators is trading at $59.35. It's down an additional $15. So $20 on the close. That is one monster number. And what do we have? So let's see what they're saying. They see their first. Okay, wow, this is a big miss. So the estimate was 90 cents, and they made 59 cents. Huge miss. Huge miss. Let's go pull this up. And it's down an additional $15. And if we pull this back and we put this on a 4-year chart, what you're going to see, this is a classic too, what you're going to see flat out is that this is an equity that went from $15 in 2011, gets all the way up to $119, and guess what? You had no volume all the way up. This is a 16. Lumber liquidators, let me put this on a monthly for a second. And if you, last time with price and volume on the way up is $58. Yes, you want, and this is an equity also, by the way, that had volume off the highs. When you get volume off the highs, folks, get out of the way. That's the real bottom line. And this had volume off the highs. She's, we'll see if she can even hold that 58 mark. Let's see what they're saying out here. Because there's no doubt, as one of our tigers are saying, that usually is a telling sale in the housing market. And there's no doubt that it is absolutely a telling sale in the housing market as to how much lumber they're buying, what are they buying, what are they doing over. So let's see. They cut their sales forecast. Says consumer demand weakened through the second quarter. Sales fell 15%. They cut the 2014 estimate to $2.65 to $3. They saw $3.25 to $3.60. The earnings per share, 59 to 61. The estimate was 90 cents. Big numbers. The thing that's amazing, inside Lumber Liquidators, what is real possible is this. What I have found is this. Okay, so pitch this. We do a huge amount of single families over, apartments over, and we basically do them over about I can do a house about every 6 weeks. And that's consistent. Lumber liquidators, folks, is expensive. We don't use lumber liquidators. What has happened in the business, and this is what very well could be hitting them, is that lumber liquidators does a huge amount of ads, no doubt. But anyone that's doing a lot of houses, guess what? You can go on the Internet. You can order on the Internet. Bottom line is that they deliver, and they basically... the delivery charge, let me just explain something for you for a second. This is cool. Let me go to Mohawk, too, MHK, because I want to show you something. This is interesting, too. So if we bring up Mohawk Industries, okay, that was down $2 at 134. And when I finish this story, you're going to see, because what does happen is that what we deal with Mohawk Industries. But what's going on is that there's a couple liquidators, large, wholesalers, period, that sell to contractors, and it's a drop ship delivery. And we get Mohawk, and this is interesting because Mohawk's staying up. But I get a feeling that the internet is maybe destroying Lumber Liquidators' business. You stay right there. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Now, to go back to Lumber Liquidators for a second, okay, so they do a huge amount of advertising. My take on it is that it's really a retail type of store. The reason being is this. They claim they sell a lot of exotic woods and all this, but most of it is laminates, folks, okay? And if you're buying, let's say you're buying 1,500 square feet, bottom line is that they're selling laminates for $425, $525, $6 a square foot. You can get if you're buying a lot of product, and you can get Mohawk product, which is sweet product, and I'm talking about real hardwood, 5/8 hardwood, at about $429 to $449 a foot. It's that dramatic. The difference is that dramatic. So it's going to be interesting to see if, in fact, that is the internet once again taking someone out. Because what does happen, which is it's amazing, you know, when you're doing a lot of places, is that this is a drop ship. This is not sending, you know, one of our guys down to, you know, a flooring store, picking it up, bringing it all the way back. We order it right out of here. The floor guy, our own guy, comes in, tells us what we need. Guess what? I jump on the phone, say, okay, that's what we need. It's a drop ship, and it's there 3 days later, you know. Well, it did crack me up the first time that we were doing this, and we'll be doing this for quite a while right now, is that, you know, good old Warren Buffett owns Mohawk, of course, and they have a variety of products, and the products that, you know, I've seen are dynamite products, and, I mean, pure hardwoods. And what the difference is, if you don't really understand the difference is that when you put a 5/8 floor in, you know, you can sand it 5, 6, 7 times. It doesn't matter. It's real hardwood. You're coming in, you know, someone wrecks it a year later, 2 years later, or someone's buying a house, guess what? They can sand it versus a laminate. There's some laminates that you can basically steal wool a couple times, but it's not the same deal. So it's going to be interesting to see just what is actually hitting that Lumber Liquidators. If we go overseas and we take a look at the FTSE, what you have with the FTSE is this. She came down on volume. She gave it up again today. Not a huge amounts today, $20 today. She's in the lower range. What she had done is that she got under a swing point. The swing point was 67.01. Now, she did that on lighter volume, so it's like, okay, she's going to do a little bounce tomorrow. We'll see if that's on lighter volume, but FTSE also wants to run down to the 6,400 area, and we're at 67 right now. We go to the DAX in Germany. We take a look at the DAX. DAX rejected the lower price out here today, has volume, however. So the DAX had taken out the swing point of 67.49. We did that with 85 million shares versus 94. So DAX also can have a small bounce. The real key is going to be we're coming into Thursday, so we can still get volume tomorrow. This is a classic out here today, though. You know, we came down on volume. You go back up on lighter volume. We've done this so many times. It's like, can you hit the highs again? I don't see it. And one of the things you want to keep your eye on is that IBB, because the IBB fell fast, furious. You can actually go over to Amazon and Google and take a look at those. Why? Because they did the same thing. Amazon come back $6 today. We did 3 million shares. Yesterday did 4.2. We go take a look at Google. Google yesterday had come down $15. She was up $4 today. We did 1.3 million versus 2.4 in the way down. Netflix, NFLX. What does Netflix do? Netflix that's interesting. Netflix couldn't handle it today. See, Netflix is acting like the small caps. The small caps, folks, basically are the weakest indice once again. Now, that has happened before. You know, if you remember the last 2 times down, this consolidation would have been in 6 months. The small caps fell apart, got down, couldn't get up, and they got up about a week and a half after everyone else. And they did make it on the way up. You know, the bottom line, the small caps came up, tested the highs. Thus far, however, what you have is that the IWM has taken out its lowest swing, taking it out with volume. That's saying that it wants to get down to that May 15th swing low of 107. Right now we're at 116. Let's go to Nick in Tampa. Hey, Nick, what's going on? You there? You there, Nick?
Yeah, I'm here. Yeah, I'm here.
And you like to look at Navigator Holdings?
Yeah, Navigator Holdings. I'd say this is a good place to buy.
Let's take a look. So they, through their subsidiary companies, they own ships that are used to transport liquefied petroleum, gas, and petrochemicals. The low's 15, the high's 30. Okay, so we'll bring this back. Put this on a 3-year weekly. Yeah, I wouldn't be buying this baby just yet.
Not yet?
Let me put this on a monthly for a second.
See, I was thinking from over the short term.
Yeah, it's interesting. Monthlies, I see what's happening. Okay. Yeah, I would not be biting just yet. So this is what you have. Is this a new IPO? It must be, right? It's out here. Let's see.
Yeah, I think it's a newer one.
Yeah, it is. It's a follow-up offering, November of 2013. Okay. So they take in plenty of money. They take in $253 million.
Mm-hmm.
Put this back on a monthly. I'd let this be for a bit. So you've been in this consolidation since the beginning of the year. I mean, the bottom of this consolidation, you're at 27. The bottom, folks, Nick, is 20. I'd let it get down there. I mean, that sounds like a lot, but it's really not, because when I'm looking at this, the stock, unless they change the name, it looks like the stock has gone from 475 up to 27.
Mm-hmm.
And that'd be a normal retracement. Do you know what I mean? That wouldn't be a big deal, man. Yeah.
Yeah, I see what you're saying.
Cooking, brother.
All right, man. Thank you.
Have a great one, man. Have a safe one. Let's go over and take a look at Big Blue. Big Blue, IBM. What did she do out here today? She did 3.3 million shares. She's at 188.42. Last time we were up here was at 5 million. So Big Blue's going to need a lot more volume to get to higher price. J.P. Morgan Chase, what we have with J.P. Morgan, she was a sideways move out here. She's building cars. J.P. Morgan's building cars to get into this $52 area. We go to Visa. We take a look at Visa. It's going to be interesting. So Visa is going to try to go test its 217 area again. And Visa, folks, the way Visa's set up is that the 217 area is basically ice. That's where this thing started breaking down. So Walmart, Walmart is trading out here at 77. That also looks like a counter-trend bounce. We did 6.2 million versus 13 today. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. If you'd like to test drive the gold report, folks, the way you do it, come over to our website at TFNN. Go to newsletters. Go to investment newsletters. You can test drive the gold report 30 days. Absolutely free. Stay right there, folks. We're coming right back. We now finish up 78. NASDAQ up 27. S&P's up 7. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders... The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom. You really assemble a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigresses weren't out there, folks, we would have zero.
Yeah, right? It's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now. I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. It's pretty amazing. July 9th. Oh, baby. This is a quote by James Garner. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. We had the Dow up 78, Nasdaq up 27, S&P's up $7. All folks with light volume. You had the Fed minutes come out at 2 o'clock. Inside those Fed minutes, specifically, this is actually pretty funny. The Fed Reserve policymakers were concerned that investors may be growing too complacent about the economic outlook, and the central bank should be on the lookout for excessive risk-taking, minutes in the June meeting showed. The bottom line, folks, is that the Fed wants folks to take risk. So it's ironic that that's what they're saying they're worrying about right now. That's why they're keeping rates low. They're pushing people out into the risk arena. Signs of increased risk-taking were viewed by some participants as an indication that the market participants were not factoring in sufficient uncertainty about the path of the economy and monetary policy, the minutes showed. Federal officials expressed concern about low volatility in equity, currency, and fixed income markets. At the same time, it was noted that monetary policy needed to continue to promote the favorable financial conditions required to support the economic expansion, according to the minutes of the June 17th meeting. Now, if that statement there didn't sound like a good old Alan Greenspan doublespeak, nothing did. Maybe we're getting back to doublespeak, and that's what we're going to have with the Federal Reserve as they try to back down and out of this low interest rate arena. The thing that's amazing, when I was going through this, is that that it's been 2006 since rates went up. 2006. We're to 2014. That's pretty intense, no doubt. But if you get a chance, just read the beginning of the minutes, because the beginning of the minutes themselves absolutely sound like an Alan Greenspan. Gold contract. Well, here, let's go through the S&P first. We take a look at the SPY. What we have with the SPY is this. The SPY traded up 88 cents today, did 72 million shares. That's after coming downtown yesterday with 108 million. The SPY's at 197.12. The high out there is 198.25. Pretty intense. The 3Qs. What do you have with the 3Qs? Inside the 3Qs, this is what you have. That was, they were up 70 cents today. Not a huge amount of traction compared to yesterday, but yesterday we were down on 40 million. Today you're up on 29 million. What was moving the NDX 100 higher today is that you had Discover was up 286. You had Facebook up 221. Alexa Pharmaceutical was up 544. Check that out. Vertex was up 306. Let's go to Alexa first. Alexa Pharmaceutical, why? Because those biotechs are important. Yeah, no juice there. So Alexa, that's just a trading range. Alexa Pharmaceutical had come down on 2.6 million shares, and that's what she's going into with 538,000 shares. We take a look at what was taken away from the NDX 100. What you had Garmin was down 277. You had Kraft Foods was down 41 cents. CA, what is CA? It's not Computer Associates anymore. CA, they design, develop, market, license, standardized computer software. That was down 33 cents. And the last one out here was Cerner Corporation. That was off 53. Inside the Dow Industrials, what we had is this. Taking the Dow up was Disney. That was up $1.36. Cisco was up 37 cents. Procter & Gamble was up $1.11 to 81.67. You had Nike was up $1 to 78. Taking it downtown, you had DuPont down 29 cents. Pfizer was off 10 cents. Microsoft was off 11. United Technologies was off 23. So you can see inside the Dow Industrials, nothing really got hurt out there. NASDAQ Composite. What we have with the composite is this. The composite today did 1.7 billion versus 2.2 on the way down. We're at 44.19. We'll see if the composite can get any juice going to even make back what they lost yesterday. They'd have to get up to the 78 price point. That's a long way from where we are right now. Small caps, Russell 2000 has absolutely zero juice, no bounce, all of the above. The Russell was up $1.66 today to $11.73. If you take a look at that correlation inside the iShares, we had the IWM do 27 million shares today. We had gone downtown yesterday on 52. You got to love that. Even intraday, if we put this up on a 10-minute intraday, what you're going to see is that what stopped it dead in its tracks right on the open is this. The downdraft of 9:30 yesterday morning, folks, was a monster. Someone lit into the small caps, 3.7 million shares on the open on the way down. This morning, it tried to get into that level with 1.8. Couldn't handle it. Tried again a little bit later in the day with 1 million. Couldn't handle it. At the end of the day, there was a decent trade out there with 1.6 million, and at that point, couldn't handle it with price. Gold market, whole different ballgame. Gold and silver, folks, they're going topside, so they're not believing what the Fed minutes are saying, meaning that they're worried about complacency and they're worrying about is the Fed going to leave interest rates where they are or, in fact, go up. The gold contract today up $12. We did 155,000 contracts. That's pushing a swing point with volume. I suspect what we're going to have here, this 1392, which is the March swing high, wants to get hit, wants to get tested. The equities themselves are leading the charge higher. The gold equities, the silver equities. We go take a look at the silver contract. Silver contract out here trading at 21.16. She had 35,000 contracts. That February high is 22.16. She wants to make a run for it. XAU, HUI, both of them took out their swing points. I do expect that they took them out with volume. We'll get that to a little bit later. The reason I'm saying with volume, we went through a bunch of the actual equities in the last hour, and many of them took out their B points, took them out with volume. And so you can understand something here is this. If we start with the XAU, the A point is $83.13. Your B point is 101. It's a monster, okay? When you're talking highs. What's that, 17 bucks? Well, here, let me do this more conservative. The A point would be 83. Your B is still 103. It's still 101. It's still a big number. It's still 18 bucks. 97, 107, 125. 125 is the number. And you can see, holy cow, you can see that the swing point is 107. It's a big number. So what you can very well get here, now I'll put this back on a weekly, and yeah, see what's happening is this. One pair of ice, is at 127. This thing wants to, thank you, 115, Mr. Bill, not 127. But you know what's going on here, folks? Ice inside, well, there's a couple different, but the biggest part of ice inside the XAU is the bottom of that starts at about, oh my God, it starts at 127. See, as you go into 115 is a good number. 115 is a swing point from August of 2013. This is a nice setup. What we've had is, see, when you look at this on a longer-term basis, we've been in a consolidation now for, I believe it's just about a year. Yeah, it is. The consolidation started June of last year. So that's a good consolidation, and the longer that you are in consolidations with volume pushing higher, which we have, you can get a lot higher. Gold Bugs Index, that was up 675. The A point on the Gold Bugs Index is 201. Your B point is 242, so you get 41 bucks. C point is 231. That gives you, what, a 272. Your swing point is 261. It's 10 bucks over that swing. Excuse me, folks. We take a look at the monthly basis on this, and 283 is the next swing. Yeah, after 261, 283 is game. We get action in that metals market, folks. This is Tom O'Brien. This is TFNN. You stay right there. We coming right back. We the Dow finish up 78. Nasdaq up 27. S&P's up 7.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 78, Nasdaq up 27, S&P's up 7.5. And as we do each and every Wednesday at 20 past the second hour, we have our man, Mr. John Logan. And folks, each and every trading day, right at TFNN, right on the main page, what you're going to see is this. John puts a video using his Taz market research. Each and every day, we either have commodities, indices, currencies. It's a free video. You should be starting your day off with it. It's up by 8 o'clock in the morning. Today we did gold out here. And now, as you're over there, what you want to do is you want to go to the carousel. And as you're in the carousel, what you're going to see is Taz Signal Box now available at TFNN. You hit that banner. It's going to bring you over to not only the Taz Signal Box. John's did a few videos to walk you through exactly how powerful this is, how easy it is to work. Inside that signal box, you have the commodities, indices, currencies, and you also have the S&P 100. John Logan, what's going on?
Hey, Tom, good to be back with you today.
You too, man. How you doing?
Congratulations on the show on eSignal.
Yes, and folks, if you come over to our website at the front page of TFNN, what you're going to see is that eSignal came out with a great new platform. It's 12.0. Tiger TV and eSignal, we did a distribution agreement, and we are embedded inside there, giving them analysis all day long. So check it out on the front page of TFNN, and absolutely check out eSignal 12.0. Why? Because it's not only a great piece of software, but you're going to see the Taz signal box right there also using that data feed. And depending on how long you've been listening to me, you know that on the future market, on the E-minis, and John knows this too because John has a Bloomberg. The bottom line is that they are faster than a Bloomberg, which is just a mind blower, you know. So it's really wild, man. It really is. So needless to say, John, you can see what I have up here.
That's good.
I have, John did gold this morning, and we have gold up here. So we're going to analyze gold, something different, you know.
Yeah, we did for all your listeners that didn't see today's video. We took a look at gold. We usually take something that's usually interesting to put out there as the free video every time on your site, and we do a little bit deeper dissertation on some other videos that are behind the free one. Really, that Signal Box app that we have out there really kind of paints a picture for the video that we do. So they kind of go hand in hand. We're actually adding a lot more features to that Signal Box web version this week and next week. We keep adding new things to try to enhance the usability of that thing. But it's very, it's a simple read, and that kind of, as a trader, I've always kind of, I know you're in the same boat. Over the years, you kind of have to get it boiled back down to simplicity and really,
folks, that's crucial. It's absolutely crucial. I mean, and what happens, is this, folks, depending on where you are on the curve, you will try everything. That's how it works, right? That's just how it works. But you will get to the point of simple. Simple is the name of the game, because it's really about money management. That's what it comes down to. You can have, every system is different, folks. Almost, there's many systems that are great, but guess what? If you don't keep money management, you have zero. We're in a probability game. You got to remember that.
Yeah, it's somebody. I think I told you this before. Somebody always told me a long time ago. They said successful trading is supposed to be boring, and you gotta try to eliminate all the extra stuff that really is just fringy type candy out there. So, so that thing keeps it pretty simple. But going back to gold, we've had that 1300 neighborhood DMZ, if you like to call it that way. As kind of it's an area of significance that we had to get above and stay above, at least on a weekly close, to march north a little bit farther.
Right.
And as that close happened, you were kind of witnessed all that. You were coinciding with all this with your gold reports, and that eclipse happened. And then we were kind of looking at the next resting point around that 1327, 1332 area.
Right.
And that's been something that has been approached, and with the natural classical technical analysis, kind of look at this as we crowd that area and don't really want to get away from it.
Okay.
It looks to me, throwing all fundamental looks out the window, not discounting anything we heard today from the Fed or Yellen or all that kind of stuff. From a classic technical analysis standpoint, it looks like we may be on the launching pad again to move higher into that 1360 and 63 and even higher, what you were saying a while ago, possibly, as another lurch forward here. Considering what's out there fundamentally, it may enhance this move up. But again, the good news is, if we're wrong or if that particular type of trade is not, going to pan out,
sure,
you know where to put stops. And those stops are based on appetites for risk, that everyone has different appetites for risk based on, how far we get back down below that DMZ 27 to 32.
Right.
And that makes it really black and white for me. I'm biased, obviously, towards the long side right now. I may be wrong. And, again, the good news is hey, we got to say uncle somewhere. If you don't do things like that, then
sure.
You don't get to play the game.
And, John, on the June 19th, that was one of the first times that it actually could bust one of your market profiles, right, in a long time, right?
Yeah.
Meaning on the way down, because this TAS market profile was calling this all the way down since 2011.
Yeah, we had some reasons to start looking at, like they talk about green shoots in the
yes,
in the stock market around that June general 19 area, whatever you talked about. We broke we had some technical damage for the shorts, and I was actually looking at that 1300 level as a retracement back up into being patient and possibly looking at that as a short situation. But when we closed on a daily well above there,
yes,
then it really kind of painted the picture. And the 1300 level was the rocker arm or the Maginot line for gold, and it really did pan out well. So
yeah,
and now we've got support. We know where support is. And, we just have to kind of change our tune a little bit. It's looking back in history like you were talking about over the years, literally over the years. Seems weird that we're talking about years here.
I know, man. Seriously.
Yeah, I know. As gold broke down below that 1750 area that you're pointing at, I'm looking at, we never broke above profiles the whole way down, and we still haven't. We're within a profile right now. So,
okay.
Technically speaking, we're still in a long-term bearish trend.
Yes.
But having some, other things that we look at, i.e. Navigator I'm looking at below, and then some daily situations that we look at, we have had reasons to go long and play some really good bounces, i.e. the one we're in right now.
Right.
So, these are intermediate moves up, and the long-term move is obviously still down. I do like the way this is acting, though, relative to profiles, because we have kind of a compression in lower highs, higher lows, if you can see that. Since back when that big dip happened, what was that, back in June of last year.
Yeah, exactly.
Okay, so we've been kind of like compressing. Profiles have actually been getting thinner, and we're due a breakout one way or the other, and I'm hoping the upside.
Hey, John, can you stay with me for a second?
Sure.
Awesome, man. You stay right there, folks. John Logan, Tom O'Brien, appreciate you growling and prowling with us. We ended out up 78, NASDAQ up 27, S&P's up 6.5. During the break, folks, come over to our website at TFNN, hit that TAS signal box. You can check out one of the videos right now. John and I are coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. We don't know what's going on in your world. We'll talk about I am Mr. John Logan. We're talking, folks, the TAS signal box. Now, as you come over to our website at TFNN, you're going to see right in the carousel, you can test drive this signal box absolutely free. Of course, it has the commodities in it, the indices in it, currencies in it, but what it also has in it, folks, is the S&P 100. So if you're trading equities out here, guess what? You can use this signal box to identify where you want to be buying, where you want to be selling, and more importantly, where you want to be putting your stops, okay? Because we all, can buy and sell everything each and every day. The bottom line is that where you're going to put your stops. Now, in that context, John, right, what I want to look at, I have this, is Chevron, okay? So when we take a look at Chevron, can you walk me through this? Because what's intriguing here to me is I'm still, getting used to basically how this works. And, Chevron on June 4th is down at 122, had this huge expansion all the way up to 133, and then all of a sudden a new box shows up. Is that a supply box? How does this work? John?
Yeah, I'm sorry.
No, I'm sorry, man.
Can you hear me?
I can.
Okay. Yeah, that is saying that, yeah, we've got a new profile up there. That's supply. That's where it will have to get through.
Okay.
You can hear me, right?
Yes,
okay.
I can.
Okay. And, some of those inflection points that you're showing on Bloomberg there, those are just basically lids on the marketplace for Chevron that, the way I look at it, if you want me to dig a little deeper into this.
No, that's what I was curious about. Okay, so that has to get through that in order to get the higher price, right? So go ahead. I'm sorry.
I'm actually showing. I'm looking at a couple of different time levels, and I'm looking at some of the other indicators that we use. This is actually kind of staying within more of a broader profile than you're showing right now.
Okay.
And I'm looking at it. This is, even though the market is, even though oil has pulled back relatively, hard, so to speak, lately. What are we down, like $4 or $5 off the highs?
Yeah.
So let's look at that as, all intents and purposes, that's like a 5% move down in crude oil, and Chevron has really kind of just remotely come off the highs and actually rallied today. So I'm looking at this more of a consolidation to kind of like retest that profile above and kind of use that to gravitate back into at the very least.
Yes.
I've got the Maginot line for this around 129.74.
Nice.
If we break below there, if we close below there, which we haven't done yet, then kind of you got all bets are off on the long consolidation type concept.
Okay, so now let's go over. We just brought it up. Let's go over the oil market itself.
Okay.
So we're at 102.29, and you can see that, I guess at the top of this profile is saying, hey, guess what? It couldn't make it. And it's pretty wild. It can stick its head up there, but then it seems like every close was underneath that top profile of 107.45, right?
Yeah. I'll just kind of get into this on the weekly and then the daily.
Okay, cool. Let's do that. Perfect.
Yeah, we had obviously a strong kind of relentless move up, buy support.
Yeah.
From the, good Lord, that was in like the mid-80s or 88, I believe, is when that kind of move up started. Right. And what we want to do here is take a look at our daily in relation to that. So as we broke above profiles on our weekly, found support on some POCs on the weekly, those coincided with some daily numbers, inflection points that we're looking at. Well, what do we do now? Now that we've climbed up and we have a new weekly profile that's appeared and locked itself in on our long term as of right now.
Okay.
And that means that, hey, okay, we've got some new ranges starting to happen, and what we're seeing right now is that we have pulled back on a good support level down into some. We talked about this morning on the crude oil video. 102, 103 was actually some form of support on crude, but
yes.
we were looking at a little bit different contracts. So right now, I'm actually seeing the 102 area, which is where I see. Are you looking at the August or the?
I put up the CLA for the active contract, and it just gave me the July, last trade July.
Okay.
Yeah.
Okay. I think I may be looking at a different month here, and I'm sorry about that.
No, that's all right. That's all right.
But we are really at the bottom of the range we talked about in the video this morning, around 102. So we do have some support here.
Yes.
But we do have new long-term weekly numbers, and those long-term supports on crude oil are around $100 a barrel.
Okay.
So the way to look at this is we've got intermediate support right now at 102, which we're pretty much around that area right now.
Yeah.
And if that's broken, we've got 100 sitting there, and I'm not so sure that, even this kind of disturbance in the Middle East that may pop its ugly head up again, I'm not so sure that is really going to be the driving force to make this bounce again. If gold starts rallying, in my opinion, taking a little bit of a detour away from technicals for a second.
Yes.
I think the slant is toward inflation right now, and
right.
You walk around, things are getting more expensive. I don't care what the CPI, and all that says.
They are. No, I agree, man. Food is in itself, even though, you had the commodities come down, meaning, wheat, beans, corn. But the bottom line is that food is getting very expensive. Yeah.
Yeah, I mean, I'm a big fan of food, so that's big part of my expense here.
Yeah, too much.
You want to talk? You want to drift away from crude for a second, because I think we've covered that. I want to talk about some other things that the signal box kind of has picked out.
Oh, cool. Yeah.
Boeing, your favorite short, probably still. That's still on kind of the red list, if you will.
Yes.
And we know where we're wrong on that one on the short side. J.P. Morgan. I mean, this was kind of cool the other day.
I'm shot, JP's.
you are smart. And the reason that is the case is because on the signal box, maybe about 4 days ago, we had some. We had some. S&Ps were on their highs again.
Yes.
Before they started caving in, and J.P. Morgan actually that particular day it closed below profile.
I see it. I can see it on the second. So, right.
Yeah. So even on Bloomberg, we're showing the same thing for a change.
Yes.
So that in itself was saying, hey, I'm raising my hand as a very weak candidate in a very strong market, not just because I hadn't rallied in a while, because I'm literally below statistical analysis 101, which is that profile is basically like a bell curve, and you're outside the bell curve.
Right.
Right. You're outside the norm, and you're outside the norm actually on the downside. So as that close happened that day, it was almost like, okay, the S&Ps can keep going up, but at least if this is in my short radar screen, I'm not going to get hurt that bad. And that's kind of another way I look at signal box is it picks out these things for you. You sort it. You find those candidates on big run up, big run down situations in the S&Ps or your sector, and it's pretty plain to see.
No, it's huge. Particularly when you get one of the largest banks in the world that we know is a good run bank. So it's not like and specifically it's like you're at highs in the market, the S&P's up, it's a decent bank, but guess what? Someone's selling it, right? I mean that's what it comes down to.
Yeah. Have you been looking at the currencies lately?
I have.
We'll say that the dollar has, it obviously it didn't like the news today. It shouldn't have liked the news today. But it's hanging in there. I mean, like we talked about 80.31 down into 80.17, kind of.
Yeah, look at that, man. That's got a nice little profile down there. Interesting.
Yeah, kind of being there.
Yeah.
And on the daily, we've got kind of some support around 80 in general.
Right.
So, I mean, it could have taken out a little bit worse on the chin today. We may have some follow-through, some people just having to cover tomorrow morning on the long side. But, we still have support down here. All bets are completely off, in my opinion, below 79.5, just like it was before in that general area when we had that washout.
Yeah, and that's what's so cool about the software, folks, because let me tell you something. If it gets below that area, and if you happen to watch Tiger TV, it's like, oh, man, hey, listen, you'll have a vicious downdraft. I mean, the next stop would be 79.36, which should be like, okay, you take that out, man, and you get some big problems. Yeah.
Yeah, I mean, it takes a lot of hope out of trading. I mean, for me,
yes.
We developed a lot of these things because we use them internally. We've got a proprietary trading group that uses it, and, I mean, it basically makes things a lot more black and white, and it takes the original market profile concept and turns it into a very rules-based environment.
Right.
We use a lot of things in conjunction with what we're talking about today. That's why I can speak a little more, a little bit more deeply about some of these biased opinions. But, this is basically the crux of the argument.
And, folks, the way you test drive it, come over to our website at TFNN. You're going to see the Taz signal box right on the front page. On the carousel, hit it, test drive it right here, right now. John, have a great one, safe one. Look forward to speaking to you.
Appreciate it, Tom. You
too. You stay right there, folks. Come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 78, Nasdaq up 27, S&P's up 9.5. What's going to get interesting inside that Fed minutes out here today, folks, what you also had is that you had participants inside that June meeting agreeing that interest rates on excessive reserves banks are holding on to deposit at the Fed should play a central role in the exit from this monetary stimulus. Now, that's according to the minutes that are out there. Now, what gets intriguing about that is this, is that one of the main reasons, the speculation is, but this totally makes sense, that there's not enough money in the system that people can actually borrow, is the fact that the Fed has pumped money big time. But what they've also done is that the banks themselves have decided that, guess what? They push money back into the Fed and stash it, and the Fed's paying them. You know, they're not paying them a lot, but guess what? They're paying them. And when you scale up a fiat system, meaning that, you know, you can basically get interest on air, that turns into big money. The Federal Reserve, I expect what you're going to probably see out there is that if they get rid of that, if they stop paying them, I believe they're paying them 0.25% right now. You get rid of that and, in fact, charge them money to basically park money, guess what? You're going to see a huge amount of cash get injected into the system. So it's going to be interesting to see, okay, is that one of the things, one of the tools that they're going to use in order to basically take the bond market, take the cash market, and keep money into the system. It seems to me right now, when we look at the bond market in particular, what you do have is that bonds are refusing to go down. That's even with the Fed pulling back. And one of the main reasons there is that why? There's more demand than there is supply. We've talked about the dollar bond issuance across the world. It's absolutely huge. It's getting bigger. And what you do have is that it always has to do with what is the competition in the world structure right now? What is it? What are people paying for debt? And, you know, no matter which way we slice and dice it, it looks to me that on a continual basis, we are still paying, meaning the U.S. government, a huge amount of money compared to the rest of the world. So if we look at the real time today on a 10-year basis, this is what you have. In the United States, you get 2.5. In Canada, 2.2. Brazil, you have 4. Mexico, 3.3. The United Kingdom, 2.6. Now, check this out. This is where this gets really whopped, though. France, 1.6. Germany, 1.2. Italy, this is really... Now, Italy, folks, Italy and Spain were all but defaulting 2 years ago. Italy, they're paying 2.8% for a 10-year. So do you want to go... trust Italy to pay you 2.8%. I trust Italy, you know, I love Italy, okay? But the bottom line is I want to vacation in Italy. I don't want to lend them any money. Spain is 2.7. So picture this. We're at 2.55. You could either give us our Treasury money at 2.55 for 10 years and depend that the U.S. dollar will stay where it is or go higher, you know, or you can go over to Spain and give them money at 2.7 when I believe that when we look at highs to lows, I think Spain was running almost like 7 or 8% a couple years ago. It's just whack. It's what it has to do with, that's why the rates are going to continue to go down, because this is a race to the bottom across the world, not just the United States. And it's always, what is your competition? Let's go to Ralph and Ryan in Tallahassee. Sorry. Hey, Ryan, what's going on?
Hey, man, how you doing?
I'm doing great. You having a good day out there?
Yeah, not too bad. I was calling in to see about GW Pharmaceuticals. It's GWPH.
Let's take a look. They research, develop cannabinoid prescription medicines. Okay, so I get this one. This one here, the low is 8, the high is 111. I believe this is probably one of the really only pure pot plays out there, folks, okay? You know, there's a million penny stocks out there that people have lost a fortune on already, meaning in the pot business. This one here in particular is not one of those, okay? But they are doing a huge amount of research medically that, you know, that it's real, okay? They take in about, I think they're taking about 30 million right now. Let me just see this 1 second. Okay, so they take in, yeah, they're running, it's not bad. The first quarter is 25 million, actually. They're running, it's quite an expansion. Okay, so they're running, last year they took in 27 million, but they have a run rate right now of about 100 million. Okay, so if we take a look at this, it's at 91 bucks. Don't bite on this baby just yet, okay? But I got to, you know, I think you have something here, but you're just going to need some patience. And if we put this on a monthly basis, okay, so on a monthly basis, let this is a long way to go down, but it went a long way up. This stock, folks, went from $8.46 up to $111. You're under the highs out here. The last high, 109. You're at 91. It looks to me, Ryan, that this thing can get down to about $74. Now, the way it would work, at $74, I have this on a monthly chart, okay? At $74, it has real volume. On a monthly, it did 28 million. When it comes down to 74, if you're coming down with too much volume, don't bite, because it will go to the bottom of that bar, which is 41, which sounds insane. Okay, that sounds insane. But when you look at the market cap versus what they take in, this is where, folks, okay, patience, you definitely want to do this, because the market cap on this equity is $1.7 billion. Wow. Yeah, that doesn't make any sense, okay? So check this out. Because if we do 1.7 billion, they take in, let's say they take in 100 million, what is that, 17 times gross? That's insane. That's not, you know, so I think you get something here. But this is going to be one of these deals that you just sit there and wait and wait and wait. You bite when it gets down to those lower levels, rejection, lower price on lighter volume, then you get some action. Because what you're gonna face here also is that you're gonna face a backlash, I suspect, in another 2 or 3 months about the amount of folks that have lost money inside the penny market, and a lot of, you know, in that pot business. Do you know what I'm saying?
All right.
Okay, man. Thanks for
it, man. Thank you.
Have a great one, man. Have a safe one. And what you have had happen out here is this. Check this. This is what the statistic is, folks. The statistic in the penny market is that over 20% of them, of the volume, is on these pot stocks, and they've gone from a couple pennies to 77 cents, and then they crashed again. Always remember, whatever you think about, you bring about. Whatever you're focused on grows. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.